Hello, and welcome to myfinancesteacher.org. Hey guys, let's have a look at gold again. And since my last video, gold has been doing very well. Before we continue, let me remind you guys to subscribe to the channel if you haven't, and click that bell notification. Thanks a lot. In my previous video, I mentioned that we were likely to go at least up to 1625 and probably up to 1650. And that's actually almost exactly what gold did last week. The high on Friday was less than $1 below 1650. So I hope you guys are pretty happy with your long positions in gold-related assets, just as happy as I am with mine. So personally, I am still holding those positions. I haven't sold any of those. But if I see some weakness in gold, which is quite likely, I might sell at least a big chunk of those positions. And here are the reasons why I think gold might experience some weakness in the short term. Firstly, the daily cycle, the short-term cycle, has been going on for 38 days. These last for a couple of months usually. So although gold might still continue upwards for, let's say, a week or so, it also might actually enter into the declining phase of the short-term daily cycle. Secondly, the stretch above the 200-day moving average is somewhat stretched. The price is about 11.5% higher than the 200-day moving average. And we've poked through the upper range of the Bollinger Band several times. We might do that a few more times next week, and then probably turn down into the daily cycle low sometime over the next 2 to 3 weeks. Looking at RSI already is into overbought territory, and that's a 14-day RSI. And the intermediate cycle itself is still okay. It's been going on for 101 days, that's just over 3 months. So there is still potential within the intermediate cycle. So as the short-term cycle might continue for another few days, we're likely to see a daily cycle low over the next 2 to 3 weeks. And whether the third daily cycle within the ongoing intermediate cycle will give us a higher high or not remains to be seen. But in either case, the world is full of risk at the moment in the stock markets, for example, with the coronavirus and a lot of other concerns. So although gold is a bit stretched at the moment, I'm not selling anything yet until I see a weakness. Because as I mentioned a few times, the trend is your friend until it isn't. Once we break through 1650, the next resistance level might be the round number of 1700 on gold. And you don't want to miss the chance of going that high by selling right now at the price of about 1643. So that's my look at gold itself. And for dessert of this video, I want to offer you a cuppa. There are a lot of cups that I can see on the charts. This, for example, is GDX. We see a cup and handle formation here, and GDX has already broken out of that formation. Here's GDXJ. These are junior miners. And again, a cup and handle here, and the breakout of that handle has already taken place. Here's a chart of silver. If you squint a little bit, you still can, I think, see a cup and handle formation here, and the breakout also happened last week. Here's silver miners, another cuppa for you here, another cup and handle for you with a breakout, and interestingly, an unrelated asset, Bitcoin. Although some people might consider Bitcoin as a related asset, as some say this is a safe haven asset as well. And you can also see a cup and handle formation forming on Bitcoin as well. And as the ongoing daily cycle matures, it's been going on for 67 days already, we should probably see a breakout of that cup and handle formation relatively soon. So cups everywhere. So enjoy your cup of tea, enjoy your cup of coffee, relax and watch your investments go up. Let me know what's in your cup today. Is that tea or coffee? Let me know what's your opinion on the precious metals and Bitcoin. Remember to hit that like button, subscribe to the channel if you haven't. I wish you a great rest of the weekend and good luck in your trades.